Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is? Stay with me. So if you got a client who bought stock at 8 and it now sits at 16 and he's all fucking happy, he wants to cash in, liquidate, take his fucking money and run home, you don't let him do that.
Okay.
Because that would make it real.
Right.
No, what do? You get another brilliant idea, a special idea, another situation, another stock to reinvest his earnings and then some. And he will every single time because they're fucking addicted. And then you just keep doing this again and again and again.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Guys, we're going to jump right into the TA today. I have a busy day ahead of me, and I want to do an economic update before we get into the TA of all the markets, Bitcoin, and the cryptos. So let's look at Trueflation because we have the CPI coming in on Wednesday, I believe, of next week. We have the solar eclipse, covered that extensively, happening on Monday. Lots of cyclical events, but what is the actual state of inflation in the economy? How is this punching you in the gut? Well, just look at my screen. Trueflation. This is aggregated inflation from 130, so January 30th, 2020 to today. 24.33%. And this is why you see everything cost more. That's the embedded inflation in the system. Another way of looking at this is to understand that's how much of your purchasing power your dollar has lost. So in other words, if you haven't received a 24% raise since 2020, that's how much money you have lost. If you were making $100,000 for purchasing power, you're now living off of less than $80,000 because everything is embedded. Everything is more expensive. The Fed is not trying to do deflation. They're trying to slow the rate of growth, but this is where it stands right now. So if you look at this chart, guys, this is a 3-year chart. Look at where we were back on 2021. We had 5.5% embedded inflation, and now we're all the way up to this 24.33%. But look at this on a 1-year chart. So when the Fed talks about making progress on inflation, when the talking heads representing the massive market Ponzi come on CNBC and Bloomberg, talk about making progress on inflation, your progress ended essentially back down here at 22%, and that was in December 31st, 2023. And look what inflation's done since then in prices. This is in the price of food, energy, commodities, everything you need to survive, including housing. Everything is more expensive, and it will stay that way until you get a deflationary event such as the recession happening. Let's go ahead and go forward one more slide. Looking at this chart, guys, the Shiller PE, we've talked about this before. If you go back to 1929, look how expensive the market was, 31.48 on a Shiller PE. Anytime you're above 30, it results in a crash, okay? So 31 in 1929. Look at .com. .com, you got all the way up here to 44 on .com. And then you have to come all the way out to where we were right before Volmageddon, July 2018, you got to 32.39. And then, of course, in 2021 of October, just before the NASDAQ peaked in November, the Russell peaked in November, Bitcoin peaked in November, you were at 38.58, and then you sold off all through 2022. Bitcoin fell 75%, the NASDAQ fell 38%, and where we are now is 34.83, the red dot right here on my screen, guys. 34.83. We're looking for this retracement in the market, and I believe we're going to bottom. And with all of the liquidity in the system, the fact that it's an election year, the fact they want to prop up the market, the fact that the Biden administration is spending more deficit spending ever than U.S. in any time in U.S. history, adding $1 trillion to the debt every 100 days, I think we're going to take out this 38.58. After we retrace, after we rebound, and then move to our blow-off tops. Having said that, let's look at some of these indicators in the marketplace. The 10-year yield. 10 years at 4.35 essentially right now. That was the key level we have to take out to see more upside. And we've talked about these levels before, guys. Our 1618, let's go ahead and draw this. If we look at it this way, if we take a Fibonacci retracement down here, if we can get past this 0.5 fib at 4.40, which is where we got rejected, let me expand this some. We got rejected right there. Then you're looking at 4.55 at the 618, and above that 4.756. Now, any of you that watch business news understand that the economists, the money managers, they're all split on this, right? Are we going higher? Are we going lower? If inflation comes in hot again, which again, that big CPI print is going to drive the markets this Wednesday coming up. Inflation comes in hot again, you're going to see the 10-year continue to move up. It's projected to come in hot. We've had multiple prints now come in hot. So you can see this move up, put pressure on the markets, look to trigger our descent here for the retracement before we bottom and make our blow off tops. Let's go ahead and move forward. Looking at the dollar, DXY, found resistance right at our fractal, 104.96. And you can see we hit it, got rejected. But when you look at this from a retracement perspective, just on this leg, you're just coming down to basically the 382, trying to hold support there at 104. You're at 104.021. So if this does proceed to move to the upside, let's look at it like this. A couple of projections we can do here. Let's do this. Let's take our trend-based fib and let's get a reciprocal move here, looking at how the market likes to move in symmetrical fashion. If we get our reciprocal move, you can see our one fib up here at 106.704. And if we take our fib retracement, understanding that this is a W right here, you see this W? This is a W pattern right here. So we'll be looking for that breakout to the upside, which we have this breakout, but we found this resistance. But let's go ahead and just pull a fib down from that midpoint. Look at that, 1618, 106.573, 106.704. So it seems like if we can flip 104.963, in other words, we come back up here, do this move, find some resistance maybe at the 1272. I think we're going to 106 on the dollar, but that won't happen until that retracement kicks in. People move to the dollar, okay? Let's go ahead and move forward. Let's look at the ES1. This is an E-mini S&P, guys. This is our fractal pattern we've talked about many times, our 20% up waves, our 10% corrections, all through the pattern until you get to our big 29% overperformer upwave right now in the marketplace. We're at 53.05 right now as I record this. Remember, we're looking for our 8 to 10% retracement. So let's do a couple of things. Let's look at a clean chart here of the E-mini. Last video, we went over the solar cycles. We talked about the eclipse coming up. We talked about the eclipse crash cycle, how that typically plays out over an 89-day period. And we know that we're looking for an 8 to 10% correction. Well, to do this, I want to show you guys something. If we look at our previous correction here, right? Here's our previous correction, our July high in 2023 to our October low. Let's just take this date and time. This is 22 bars, 93 days. What's that eclipse crash cycle? 89-day play out, right? Fibonacci. So when you look at this, 11% move, 22 bars, 93 days. We already know we've been over these advanced Fibonacci concepts of our different target levels for the S&P. Go back 2 videos if you didn't see that. We did it for the equities. We did it for Bitcoin as well. But what we do know here is if if the S&P does this exact same decline coming up soon, looking for that 10% correction. And if we break this out to that 89-day period, we can call it 21 or 22 bars. Let's go ahead, 21, 22 bars, 89 days. Look where that takes you, June 25th down here, right on the summer solstice on June 20th. Okay, so just a few days after. Let me get a vertical line and map this out. If we end up doing the similar retracement as we did before, you see this? We could come down. Where would we come to? We'd come either to this 4,800 level we've been talking about, or if we come deeper, we're coming to this level down here at the 4650 level, right at the top of this previous retracement. So that's what you'd be looking at. That's a 13% decline at this juncture to come down to this previous corrective structure right here, or we could come down here to the 4,800 level. Those are 2 levels we're looking at, guys. But when we look at this, A couple of things I want to show you looking at Fibonacci, right? So when we look at these projections, remember, how did we get this target up here, 43.34? How did we get that target? Fibonacci retracement, July high down to your market low. Look at your 1618, 53.34, right? 53.34. As of right now, you're at 53.03. This is still your top. You're only getting these techniques on this channel, my friends. So definitely smash the like button, hit the subscribe button for me if you enjoy this type of content. So that is your top. We got within $1 of that exact top. So if this ends up holding, even if we get wicks above, if this ends up holding for the retracement, look where the retracement would take you back down to potentially your corrective July high. We know a potential date around the time frame of the summer solstice. This is what we'd be looking at here, using the same exact play out of the eclipse breakdown of 89 days, right? So we're looking at 20 to 22 bars, anywhere between 78 and 93 days, something like that, for this retracement to play out. What's really interesting, so this is how you get your 53.34, and you can see how accurate it was, assuming this is the level we retrace from. Well, another pattern you guys need to understand, let's assume we come down to this level, right? So we could take a fib projection on this current leg, if this is our top, down to that previous leg. Try to stay with me here. I'm going to show you. This will make sense in a second. Look where your 1618 expands to. There's our 6,000 targets, almost 6,100, 6,082. Okay. So what this would look like, let me go ahead and remove this. What this would look like, showing you how everything in the market is a 5-wave or a 3-wave pattern. This is something, a key concept you need to understand. It would look like this, right? Here's your wave 1. Here's your wave 2, your corrective structure. Here's your wave 3. If you retrace from here, our wave 4 can come down to the 4,800 or 4,600. It doesn't matter. So we'll just pick that middle, 47.28. And then our wave 5 for that blow off top will be up here at 6,082. It's your 5-wave structure. This also gives you a key harmonic pattern of 3 waves to a top. Wave 1 up, wave 2 up, wave 3 up. Looking for that topping structure if we start to retrace from this 53.33 level, and then start putting in our bottom somewhere between 4,800, 4,600, depending which structure provides our support. And of course, we can get confluence with this move as well, guys, if we just take a Fibonacci retracement from our current high of 53.33 and we pull this thing down. We can pull this down. Look at our 1618. If we come down to that 4,600 level, right? If we come down to this 4,600 level, 45.85 right here, you come down to this level, lining up with the one fib. Look where your 1618 is, 5,800, but your 2 fib is right on top of the 1618 up here at 6,082. Again, once we know where the retracement comes down to, we can get more accurate Fibonacci projections. But this is my pathway here I'm showing you to get to 6,000 after this normal retracement that we have done over and over again, going back for 4 years in the marketplace after 21% waves. We're overextended at 29%. So we're going to get this correction either to 4,800 or 4,600. Where we retrace to will give you your balance point for how high you can move to. 6,000, 6,100 looks like if we come down to that 4,600 level, that's going to be the blow off top, completing a key 5-wave pattern, a key 3-wave pattern, something to pay attention to in the marketplace. If we look at our important dates coming up here on the E-mini, just had our lunar eclipse right here. We had our topping action. We're at 53.33 on our top. We have price pushing up at 53.04, and our total solar eclipse, the last one which occurred 7 years ago, coming up here on Monday. So let's see what happens. Remember, the eclipse crash cycle, again, not my cycle, guys. This is just the cycle. I'm sharing it with you. The eclipse crash cycle calls for further decline to the following new moon, which is May 7th, right? So you'd see selling all the way out to May 7th. Why do I always lose my tools here? Where is a stupid brush? Hold on. There it is. All right. So we're looking for this further selling all the way potentially out 30 days of selling, potentially out to May 7th, where you rally back up once again, and then you come back down for your final low. That would potentially be that window we talked about last video around the summer solstice, that June 20th date. Right? That's the potential window we are looking for this move. So we're going to watch this, see what happens. Let's do some TA on the E-mini. Looking on an 8-hour chart, what do you have right now? Well, right now you have a 5-wave structure that formed. We can just take this pivot up, topping pattern, right? So here's your 1, 2, here's your 3, here's your 4, and then this is your 5. Whether it takes out the high or makes a lower high, as of right now, this is where you're at. 5308 was your lower high rebound today so far. And what is this really, guys? This is just a W, right? The whole market is W's and M patterns, 3-wave and 5-wave structures. This is just a key concept to learn in natural law of trading, okay? So this is what we're looking at. The 786 is a little bit higher at 5312 on a Fibonacci retracement from your all-time high. So we're in this range. We have non-farm payrolls coming out tomorrow. This is a bullshit government number that only has a 40% response rate. But if it comes in hot, meaning jobs are too strong, it's going to be bad news for the markets, because the markets want jobs to be weak, because they want the Fed to cut as soon as possible, because the market's priced for perfection, and it's priced so that nothing bad can happen in any potential scenario. And that's where we're at in the market. That's how you get over 30 on the Shiller PE. But guys, these are all key levels to watch. 5333 is your current high. If this number comes in hot tomorrow, the jobs number, look for this to reverse and start selling off. Look for the 10-year to start going up. It's really this simple and this binary. If the CPI comes in hot as predicted, exact same thing. Look for market weakness. Look for the 10-year to move up. Look for potentially gold to move up in the metals. We're going to do a commodities video. I'll release that next week, guys. I'll do a commodities video covering many of the commodities, not just the metals. Okay. It's a lot of work, so I got to get all my charts ready for it. But let's go ahead and look at a couple of things here. 8-hour time frame, the MFI is flat. Momentum's basically flat as well. So you're just ranging. This is basically waiting for this number tomorrow morning to get some more action. It is an update, a rebound day in the market. When you look at this from a daily perspective, you had your disjointed double top form. You broke down, and now you're rebounding back up. So the key is to see where this rebound gets to. Looking at the NASDAQ, guys, same exact thing that we're talking about on the S&P. When you look at your MFI here on a 3-day chart, you had your peak. And remember, where did all these rallies peak out at? Let's just look at this real quick on a daily. All of these rallies peaked out right here. Okay, you have your bearish divergence across. Let me squish it in so you can see it. Your bearish divergence across all of these indices was all done during the Santa Claus rally, the winter solstice rally, right here in the MFI. And then look at this down across the board. Look at your momentum down across the board. So on the S&P, on the NASDAQ, on the Dow, all of this leg right up here, this is all a divergent rally. Doesn't mean it can't go up. Clearly it's gone up, right? I told you this many times. Divergence doesn't matter until it matters. Fewer people, this is part of FOMO, can pay higher prices and drive it up. You know, right now hedge funds are net short. What does that mean? It just means they hold more short positions than they do long positions. They're expecting a decline in the market. However, if the market keeps going higher, that could be a propellant for further upside because of a short squeeze. But right now, this is where we're at in the marketplace. Look at this on the 3-day chart. Let's do this again on the 3-day. Look at our projections here for where we can get to. 3-day chart, guys, it's going to be the same thing, right? It's going to be line up the exact same way as everything else did. If we look at our decline from our peak, 18,709, if we come down to that corrective high, it's a 15% decline, okay? 15%. If you come down to that higher level of 17,144, you're looking at an 8.5% decline. So those are the two areas we're looking at for decline. So really, this is just something you have to be aware of. So we have this exact same move here in the market for this corrective structure. Money flows through all of these indices the same. This is a 12% decline, 23 bars, 98 days. Okay, so you can do the exact same thing over here. If you start counting out 21, 22 bars, 23 bars, you start looking at 100 days on 23 bars, takes you to June 28th. Does it have to repeat this exact same structure? No, it does not have to repeat it, but I think it's highly likely to repeat it, okay? And remember, where are we getting caught up here on our fibs? We went over this in our advanced fib video, but if you just pull this fib down here, previous all-time high, right at your 1272, guys. Your 1272, 18,476. You're at 18,550 right now, ranging, going sideways in the range. Let's zoom into some smaller price action, 8-hour time frame. 18,709 is your high. You want more of a high? You got to take that level out. You fell all the way down to 18,201. Was this yesterday or Tuesday? You fell down to 18,201. If you look at this on a daily time frame, all you're doing is a rebound for the double top. The key is flip that fractal 18,709 for more upside, or else you have just done this three-wave pattern and this could top out, right? So let's go ahead and look at this on a smaller time frame again, 8-hour time frame. Let's pull a fib down from our top down to our low. You got above the 618, the 786 is at 18.6. You're at 18.5 right now. May come up and kiss it. Look at all this resistance, all the supply that gets dumped on you up here at 18.6. So key inflection range for the NASDAQ. Again, sell off, rebound, three-wave pattern. You guys hear me talk about this all the time. It's a three-wave pattern, AKA a double top. That's where we're at on the NASDAQ. We look at our momentum, bounced up here, starting to roll over in an 8-hour time frame. Momentum is pretty much flat as well, still in the bearish territory. So we'll see if this holds up. That key data point tomorrow, non-farm payrolls, will move the market, as well as CPI on Wednesday will move the market. To me, it's just topping action. Let's look at the Dow, baby S&P. Look how precise we hit this fib. 1618, 40,298. Go back and watch my fib video. Look at this. We got up to 40,358. You are stuck below this fractal here at 39,657. You're at 39,652. This is not rebounding very strongly at all. Remember, all of this, here's your December winter solstice Santa Claus rally. That was your peak momentum. Peak in money flow. All of this is divergent. Again, would be looking for this check back when this starts to roll over. Let's see if Monday we get our change in trend. But I have a feeling, even with the total solar eclipse, market's going to want to see what happens on Wednesday with this CPI. So you have the same exact checkbacks here, guys. You can come back down to the structure at 38. Right here at this level, which is almost a 5.5–6% decline, depending where you came to. Let's call it 37,804, 6.25%, or you come back to your July high, 11%. Okay, those are the two structures I'm looking at because of peak participation, peak FOMO, peak money flow, peak momentum, always back here at that 38 level. And if this got ugly, if this got nasty, watch your July highs from 2023. Let's go forward in the Russell. This is the big one they've been pumping on all the business news. Got to get the small caps. Well, maybe not so much with a 10-year yield above 4.3. But this is where you're at right now in the Russell. All of this is divergent. We look at this on the daily. Let's look at this. So again, where's your peak participation here? Money flow, everything else. December. Santa Claus rally, winter solstice right here. You sold off some, and then what was this? This is all divergent, lower highs here in the trend, especially this quadrant where you are now. Look how low you are. Same with momentum. Look at that peak momentum, just like a rocket ship shooting down, went straight down to the side. So again, people can pay higher prices, fewer people, and drive markets up. The key thing is when they flip the switch, remember markets fall 3 to 5 times faster. Looking for our retracements, looking for the Russell to revisit the 1800 level. We went over those levels before. 1800, 1850, somewhere in that range will be a key retracement level for the Russell. All right, guys, let's look at Bitcoin. Let's talk for a moment about 100K Bitcoin and how you get there. In our advanced Fibonacci video 2 videos ago, guys, I gave you Bitcoin projections. I talked about 90K Bitcoin, slightly higher. I told you it matters where you get the retracement to because when you're looking at expansion ratios, this is all mathematics, this is geometry. When you're looking at the harmonic ratio, the deeper you retrace, the higher your projection can go for the 1618, right? So let's talk talk about this because I can show you how you get to 100K Bitcoin in this cycle for the blow off top. And when we're looking at this from the previous all-time high, pulling down the fib retracement to your market low of 15.5, notice where your one fib is right there at 69K. Where is your 1618 on a 3-day chart? Looking at 102,088, 102,000. Okay. Remember this number, 102,088. So we talked about how we nailed this top, right? The 6% moves between the all-time high, 6.5%, gave us this top, gave us confluence for the short, gave us a nice Bitcoin drop from 73 down to 60K, shorted Bitcoin again up in this area, got a nice 10% drop once again, talked about these levels on the channel for weeks, posted these trades in the Discord. Remember that 10%, guys, that's the whole size of the correction we're looking for in the S&P. This is why crypto can be a great money maker to trade in a trader's market. But that 102 level, how else can we get there? Because we previously used this Fibonacci projection to nail the top, right? Our accumulation high down to the diamond pattern breakout low gave us the 2 fib right at 73,765. So we hit the 2 fib before in a projection. So what I want to do is look at the retracement. A lot of people lose their shit when I talk about where this can retrace to. I see it in the comments. Going from your market low to your all-time high. Just understand a 50% retracement is 44,663. It's important to understand market structure. 50% retracements are very common. Look at the cluster of candles you have in this zone. Same with over here. I think this is highly likely of a target to come down to 44, 45K, maybe slightly lower, 43K. People don't want to hear that because most people aren't trading, they're buying and holding. And this is a massive decline, but this is why I'm short in Bitcoin, okay? But once we get this decline, it's important to understand where we can go to. So once again, if we know that this is a target, this 50% retracement, watch this. If we pull from the all-time high down to that 50% retracement level or slightly deeper, but right at that 50% retracement level, look where your 1618 is, 91,919. But more importantly, look where your 2 fib is, the exact same target, the 2 fib, 200%, right? Looking for market symmetry, the exact same target we hit on the diamond pattern breakout. 200% gets you to 103. Using that Fibonacci method over here, the retracement from the previous all-time high down to the market low, always looking for Fibonacci confluence, come down to that market low. Look where the 1618s line up at. The 1618 and the 2 fib, 102,088, 103,093. This is a level that I would be looking at if we get that deeper retracement to that 44, 45K level, a 50% retracement from where you're at right now on the all-time high down, okay? That's what we'd be looking at, and that gives you 6-figure Bitcoin. This is why understanding how to trade Bitcoin, understanding how to trade these markets can give you a lot of wealth. This is what you can get on this channel. When I shared with you October 2023, the long from the diamond pattern breakout, a 200% move on Fibonacci to the upside, okay? These are very important moves, 120% gain. And if we get this decline in Bitcoin, if we end up declining here from the all-time high down to that 50% level, it's a 40% drop. And then if you flip that back around, going back to 102, 103, let's flip this thing back around. I got to shrink this down. It's so high up on the screen. Coming from 50% level up to the 2 fib, a 130% winner. So if this plays out, it's always an if, right? But if this plays out, from this channel, you got a 120% long winner. You're going to get a 40% short winner if we retrace to this level, followed by 130+% long winner. This is how you build wealth trading these markets. These are traders' markets right now. Let's go ahead and zoom in on this on a daily time frame and look at our TA for what we're doing in Bitcoin, okay? So we talked about this many times. Just remove this. Bitcoin. What can you do here to flip this, reverse this to go to the upside? You can watch channels. They'll draw a bunch of different shapes. They'll talk about different patterns. Understand this is going to follow the markets. If the markets retrace at this level or slightly higher and they start to break down here in April, Bitcoin will follow the markets. Okay. They are multiple trillions of dollars bigger than the crypto marketplace. And it demonstrated that as well all through 2022, peaking with the markets in November 2021, the NASDAQ and the Russell. But if you want to reverse this, it's just very simple, guys. You got to complete this W pattern. And to complete that W pattern, you have to break these two key fractals. This is your first hint, breaking 71,850, where we took that last short. This is your second hint, breaking 73,843. Then you would be going to the upside from this direction if you think Bitcoin's decoupled or going to move. And my next target would be 76,423 for an upside breakout. What I think is going to happen is you're going to range in this area until the markets begin to break down. Bitcoin will follow suit, okay? And to see that further decline in the market for Bitcoin, you got to take out 64,450. And then underneath that, you need to take out 60,780. Break these two levels to the downside, you're moving down towards that retracement target, that 45K, 44K retracement target. Right now, you're getting a nice rebound based on the markets rebounding, but this is how this is going to play out, in my opinion, okay? It's all going to depend when the markets start to break down, from what level Bitcoin breaks down from as well. Looking at this on the daily chart, MFI, you're right at the median line. Momentum again is way down. Obviously, you can see your bearish divergence, very apparent here on the MFI as well on the daily chart. But again, divergences don't matter. What matters in this market is psychology, and unfortunately, the data that's coming out on the economy, because people are trading around it. But that's your first key level, guys. You need to break 71,850 with some authority, come up to complete this W pattern to move up to that 74K level. That would be your next level up, 74, whatever that projection was, 74, 76. Let me see. I forget already. Get that level. 76,423 is that next level projection. But that's what you have to do in these steps. Until then, you're just ranging. There's opportunities in smaller time frames to trade and capture some of these moves, like this nice 10% drop that we got off Bitcoin. And that's what I'm doing, guys, posting these trades as I see fit here in the marketplace, based on the candle action of Bitcoin, based on the indicators, and just based on how much you really feel like trading, right? Buying and holding so much easier, but not if you're in the topping formation. It's not the place to be. Again, all of this is my opinion, and this is all for entertainment and education purposes only. Do your own due diligence as always. But those are the two ways you can see this thing break out. You have some competing theories here when you're looking at this. Here's your all-time high. You made your low, you made a lower high, and now you made a higher low. So you don't have a trend. You're just going sideways. You're starting to coil. You're getting more narrow, which is why I want to watch the broader markets more closely to see how this thing starts to break down, okay? Let's go ahead and move forward. Let's look at Solana. Again, rinse and repeat trade on Solana, guys. Our first short up here at 210 gave us a 21% drop on Solana, doubling that Bitcoin drop. Our second short that I posted on Solana, right between 200 and 205, where did we get to? We got to 204.53. We got a 13% drop, I think I want to say. Let me measure this. We got a 14% drop. So 21% drop followed by a 14% drop. Again, how you profit in the markets. This is the beauty of crypto. Both of these moves are larger than the retracement moves we're looking for in the equities. Same exact thing you're seeing in Solana, guys. Your high, you have your low, but then you have a lower high and then you have a higher low. So you're just narrowing, you're building some volatility squeezing right here for a move. The move to the upside in Solana is obviously breaking 210, as you can see, breaking this fib of 205. The move to the downside is breaking below 180. As I've said consistently, you need to close below 180 to get more downside, then close below 163. Then you will see that retracement level. Let's flip to the international markets. Looking at the DAX, exactly what we talked about last video. Markets start off. DAX was Monday, but they start selling off. Look for the DAX to do what? Sell off as well here in the daily time frame. Now you're rebounding. Let's go ahead and all-time high down to your current on a daily. It's only a couple candles. Let's go ahead and move this out. Let's just say 5 hours. get more candles. You're hitting your head right at the 0.5 fib, 50% retracement, 18,667. Watch 18,707, 18,764. Watch this sequence with the US market. They start topping and dropping after this rebound day. You may see follow through in the rebound tomorrow, but this is a key pattern here and Gartley's method of trading. If you come up to the 618, 786, you meet resistance. In Confluence, if you see the US markets dropping just like before, then this is an area for potential trades. 18.7, 18.8, right in that range. But again, everything should be done, in my opinion, with Confluence because the DAX, all these markets will follow the US markets to some degree or another. That's why you have this resistance right where you're at. Let's look at a request. This came from our Discord for the ASX. This is the Australian market. Looking at this, guys. So, again, some key things to notice when people talk about, you focus on the US markets a lot. Guys, the US markets drive the world markets. Look when you bottom. October 30th, 2023. When did the US markets bottom? October 2023. When did the European markets bottom? Give or take a couple days. October 2023. The US markets drive the markets. Couple of things I can look at here. Can already see a W pattern right here in the marketplace. I want to take some fib projections from here, fib retracements and projections. Looking at a fib projection, you got right up to the 2 fib, 79.58, almost to the dollar. Look at this. So when you look at this, this got right up to 79.66, 79.58. You're caught between the 1618 here at 78.30, 79.58. So this becomes pretty simple. Let's look at the indicators though on the daily. You're nearing overbought here on the MFI. You actually kissed it a couple times. Momentum starting to wane. You're bullish momentum, bullish on the MFI, but nearing overbought. And just like the US markets, what did you do when the US markets fell? The ASX fell as well. Okay, so you're rebounding back up for a rebound day. Let's look at this on a 5-hour. Get some more candles. Let's zoom this in some so you can see this. And if we look at this, you can see here's your 2 levels, the 2 fib, 79.58, 1618 at 78.30. We can take another fib from your high here down to your low, and you're just stuck at the 0.5 fib, the 50% retracement, 78.92. Levels I'd be interested in, 79.11, 79.38, which would call for price to do this 3-wave move if it can come up to those levels. And then I would be looking at potentially, if the US markets are rolling over, having a pretty tight stop loss, a few ticks maybe above the high there at 79.72. If this gives confluence with the US markets and starts to roll down with them, that would be my trade on the ASX. Guys, have a fantastic weekend. Be sure to like and subscribe, follow us on X, and I'll talk to you guys all on the Monday transmission. See you guys.